Have you ever had that feeling that, that big, ambitious goal just kind of swirling around in your head?
Oh, yeah.
Maybe it's changing careers or starting a new project or finally getting a handle on your finances.
Right.
You want to make a significant change, but then you just hit a wall.
Mm-hmm.
It feels like you need, I don't know, massive resources or tons of knowledge or some huge grand gesture to even start.
Absolutely. And then you hear that advice.
Yeah, the classic just start small. And inside you're thinking, small? Really? That's not going to do anything. It almost feels, well, laughable sometimes.
It's such a common feeling, isn't it? That sense that a tiny step couldn't possibly lead anywhere meaningful.
Exactly.
But today, we're diving deep into exactly that. How a single, seemingly tiny initial step specifically, we're talking about a $500 investment, can actually trigger a profound, multifaceted transformation.
So not just about money then?
No, far beyond just financial gains. We're talking personal growth, big mindset shifts, even, how you interact with the world around you. And this deep dive, it's based on a really quite remarkable personal account. Excerpts from the $500 investment, a transformative journey.
Right, that source material. Excerpts from the $500 investment. A transformative journey. It makes this bold claim, doesn't it? That this tiny step can spark huge personal change. But often, it says, it comes after people are skeptical, maybe even laughing, which is, well, fascinating.
It really is.
So our mission today is basically to unpack that. How can such a small action lead to real growth? And importantly, why does that laughter often come before people get it? What does that whole dynamic tell us about, starting our own big things?
It's a really powerful dynamic. The account kicks off by detailing the initial reaction to just investing $500. It wasn't warm, friends rolling their eyes apparently, family giving those polite but kind of dismissive remarks like, oh, that's nice, dear, but that won't get you far.
Ouch.
Yeah. And even the bank advisor seemed more amused than genuinely interested. And the source describes this internal struggle, waiting and waiting for thousands to magically appear before starting, watching endless videos, reading blogs about crypto, stocks, whatever.
But never actually doing anything.
Exactly, that classic paralysis by analysis. We've all been there, right?
Definitely. So what was the actual turning point? What finally broke through that inertia with such a, well, seemingly small amount?
It really came down to a conscious decision. Taking $500 money that, let's be honest, often gets spent on gadgets or eating out without a second thought,
Right.
and actually investing it. The key thing here, highlighted in the source, wasn't the dollar amount itself, it was the act of movement, just starting.
Getting the ball rolling.
Precisely. That momentum, that feeling of doing something felt way more impactful than any immediate financial return. It actually reminds you a bit of those big historical examples, like, remember Elon Musk asking for hundreds of millions for Tesla early on? People laughed.
They really did.
It just reinforces that idea. People often laugh before they understand what's actually beginning to unfold.
That makes sense. It's that skin in the game idea, isn't it? Suddenly it's not abstract anymore.
Totally. It activates a different part of your brain. When even a small amount of your money is on the line, information isn't just noise anymore.
It becomes urgent, actionable.
You got it. Your mind isn't just passively scrolling, it's actively looking for patterns, connections, implications, because suddenly those headlines about the economy, they directly impact you.
So was this shift immediate for the person in the account, or did it take time?
According to the source, it was remarkably quick. Before investing, just mindless scrolling through headlines.
We all do that.
But with money involved, they started reading real investing news, following interest rates, company reports, tech, updates, the works. But after investing even that small amount, the questions became much, much deeper.
Really?
Things like, what industries are genuinely changing the world? What's the real future of energy? How does real estate investing actually work? Why do some businesses scale up massively while others just fizzle out?
That's a massive shift in perspective.
It is. And that curiosity then led them to explore common investing myths. The idea you need to be rich to start.
Right, or that you can perfectly time the market.
Both of which, as the source points out, reality often proves wrong. The key insight here is that asking better questions leads to better answers. It's like building a critical thinking muscle.
Which is useful everywhere, not just investing.
Absolutely. It's moving from just seeking tips to actually pursuing real understanding.
Of course, learning usually involves some mistakes along the way. Did the account mention any of those?
It did, a specific early one. Putting too much faith in a single trendy stock. Sound familiar?
Oh, yes. What happened?
It dropped about 15% in a week. Caused a moment of real panic, apparently.
I bet. But how did that setback, even if it wasn't a huge amount of money, lead to transformation?
That's the crucial lesson. Because the total investment was only $500, the actual financial loss was minimal, maybe around $30.
Okay, manageable.
Very manageable. But the learning, immense. It's such a powerful example that you don't need devastating losses to learn valuable lessons. Sometimes those low-stakes experiments teach you everything you need to know about risk, about diversification, about not chasing hype.
Learning a hard way, but without breaking the bank.
Exactly. Learning about volatility without being wiped out by it.
And this change, it even started rippling outwards into their social life.
It did, yeah. The account talks about how their conversations evolved.
From what to what?
From the usual stuff, chatting on TV shows, maybe some social drama, simple jokes.
The everyday chatter.
Right, to suddenly having this new depth. They could now talk about market trends, innovation, startups, different investment strategies.
Which probably changed who they connected with, too.
Led to much deeper connections, actually. People started opening up about their own goals, their own ambitions, even sharing things like business revenge stories, tales of bouncing back after a failure.
That's really interesting.
It is. And the remarkable thing is how that shift just naturally unlocked new opportunities, new conversations that probably wouldn't have happened otherwise.
Just by changing your own focus.
It shows how aligning your focus can genuinely attract different kinds of interactions, moving beyond surface level stuff to more meaningful engagement.
And this all built up to what the source calls a real aha moment.
Yes, a pivotal one. Waking up one morning, checking the portfolio, and seeing it was up by a small amount. Maybe $8, the example suggests.
Fine.
But the key was, it happened without any active effort that morning.
The passive income dream.
Well, it's the first taste of it. For many, that's the promise, right? But the source frames it as much more than just a few dollars.
What was the deeper principle then?
It was that visceral, firsthand feeling of compounding, of capital itself generating returns. That profound click, realizing you can actually separate effort from income, at least in part.
Money working while you sleep.
That's the classic phrase, isn't it? It's a foundational shift. Now, sure, there were down days too, the account acknowledges that, but the overall growth, even if slow, proved the principle. Working smarter, not just harder.
That makes sense. And in today's world with social media and everything, it's so easy to feel like you're constantly behind.
Oh, absolutely. The comparison trap is real. All those curated success stories, the noise online.
Did the source touch on navigating that?
It did. And this is where investing seemed to provide an anchor. It gave the individual a crucial long-term perspective.
How so?
The focus shifted. It wasn't about racing against others online or keeping up with fleeting trends anymore. It became about building something at their own pace.
Free from the comparison game.
Exactly, free from the drama, allowing for that slow, steady, consistent progress that you can actually feel proud of. It's a powerful antidote to that pressure for instant results.
And this growth, it wasn't just financial, as you said earlier. It fostered personal development, too.
Big time. The journey itself seemed to build qualities like patience. You have to have patience in investing, right?
For sure.
Also, improved pattern spotting just from watching the market and getting better at predicting potential outcomes.
And are those skills transferable? Did they find them useful elsewhere?
That's the important question, isn't it? And the account says yes. These new abilities led to fewer emotional decisions, not just with money, but in friendships, at work, even setting personal goals. It even introduces this idea of applying investing strategies like diversification to your life decisions, spreading your risk, not putting all your eggs in one basket, metaphorically speaking.
So the principles really do extend beyond finance.
They really do.
Okay, so let's bring this all together. The ultimate outcome.
It wasn't really about the money silencing those initial laughs, was it?
Not primarily, no.
Yeah.
It was the fundamental change in the individual. They became more confident, more informed, more focused. That's what changed things.
And the money.
The $500 did grow. It turned into $1,100 within a year, according to the account, which is great, obviously a solid return.
Double their money.
Yeah.
Yeah.
But the source frames it perfectly. It wasn't life-changing money, but it was absolutely a life-changing mindset.
And what about those people who laughed at the start?
That's where it comes full circle. The very people who initially rolled their eyes or dismissed the idea, they started asking for advice.
Of course they did. They were mocked relentlessly at first. Now everyone's chasing them. It really makes you ask, what truly makes people stop laughing?
It's not the starting point.
No, it's not the initial boast or the small beginnings. It's the undeniable transformation, the tangible, sustained results that follow. That's what changes perceptions.
So, for anyone listening thinking, can I really change things with just $500 or whatever small amount feels manageable?
The answer from this account seems to be a resounding yes.
You don't need the huge loan, the fancy degree, or permission from anyone else to start.
Absolutely. The key takeaway seems to be just start. Don't wait for permission. Don't fear those initial laughs or skeptical looks.
Whether it's investing in stocks or looking into real estate or understanding index funds or even just starting your own little side project.
The most crucial step is simply choosing to begin with whatever you have right where you are.
It really isn't about how much you start with, is it? It's about making that choice, choosing to start.